Yo, welcome to The Long and Short. It's your boy Maestro. Every day we aim to bring you some potential setups and some price action techniques, some education to help you become a better trader in the crypto market. If you do like this content, go ahead, like and subscribe. Let's go ahead and jump right in. As we said a couple of days ago, Bitcoin was continuing to trade right within this range here. Okay, very small levels of consolidation, trading within a range, up and down, up and down, up and down. Price did break out of this range, okay, and it did break out aggressively. So let's take a deeper look at why this broke out, how it broke out, and what we're looking for moving forward. All right, so if we scroll down to the hourly chart, as you guys can see, I did take a quick position, so we'll cover that in a second. But basically, price was trading in this range for quite some time, and the liquidity grab that we see here actually initiated this bull move here. Remember what we said in previous videos. Anytime that you have equal levels of liquidity and that is ran, price has the permission to push higher, which is exactly what we're seeing right here, okay? If we scroll out a bit further, we can see that not only were these equal lows taken, but all of these here as well, okay? Now, I would argue that these two equal lows did take out this liquidity, but for the most part, institutions, they're gonna set it a little further behind these equal lows, right? Most retail traders, if they're gonna set up a stop loss, they'll set it essentially right next to these lows. Institutional traders, they're a little bit further down. And so price did have to dive essentially to the bottom of this line in order to make sure that it caught enough liquidity for this push higher. So if you understand that concept and you understand why these dips happen before the push higher, you have a much better idea or understanding of when price may actually move. If you were trying to take a short from the top of this range yesterday, you did get caught, which is why I said if you are going to play this method, you want to have your stop loss as close as possible here. You're going to lose a little bit instead of a lot if price does try to run away from you, which it did last night. Now, why did it break out, right? What was the catalyst to this? Well, yesterday we mentioned in futures that the open interest was way down. Whenever you have open interest down, the market's consolidating or it's been bearish, okay? That's sort of the perfect storm that you need in order to get a push in price. The retail traders are demoralized, okay? There's no interest in the market for people to take larger positions. And so what does the market have to do to remain efficient, okay? They have to start to move the market one way or the other. They have to entice traders. They have to bring the interest back. And this is why you're starting to see some of these movements in price. But again, this was all coordinated. This was all set up. Two equal lows here. As soon as you spike through, that gives you the permission to push higher. Okay. Now, where are we looking for in regards to levels? There is an imbalance here in price. There are liquidity levels here, sort of like a stair stepper liquidity here. Also, you have an imbalance here, liquidity here, imbalance here, imbalance here, imbalance here. There are objectives to the top that price can go and get. Do I think it's going to go for them? Probably so. This bounce also comes on the back of news that the Fed is reassuring people that they're going to raise the rates. Now, if the Feds reassure us that they're going to raise the rates and we get a bit of a bump in the price, sort of lock that away in the back of your mind and say, okay, we got a bump when they mentioned Fed rates last time. What's going to happen next time? And you want to start to build a pattern. Build a pattern in your mind on how price reacts to certain news events and trade around that. You don't want to trade ahead of the news. You want to trade sort of in response to the news. Once price starts to move, that's a much better position to take rather than trying to beat the market. Okay, because as we all know, market's damn near impossible to beat. Looking at the heat map, everything looks green. This is a sea of green. These are the things that we like to see, right? Nice big percentage gains on the day across the board. This means that the money is flowing back into the market for a particular reason, okay? Whether or not it's the news or anything else, not exactly sure. It could be because of the fear and greed index and the fact that retail traders are sitting out on the sidelines sort of waiting for things to happen. Lots of different reasons why Bitcoin can turn bullish, okay? Even if we go to the news here, there was a story the other day about a Bitcoin miner who actually opened a block. This is massive because it means that the playing field is still somewhat level, right? Because that guy was competing against tons of major mining operations and he won. So that's positive. That's bullish. Also, short traders, they took off $82 million, right, of liquidations from those folks. Bullish, right? If you take short traders out of the trade with pumps, they're going to be less likely to put on shorts or big shorts, okay? You're going to get your pressure that starts to build from the bottom rather than the top. If they've already lost 82 million, they don't want to lose more, okay? Especially short traders, right? Because those are guys that are typically more inclined into what's happening with the market because they know how to trade short. Most traders, when they come in, They just know how to trade long. They know how to take long positions, and that's it. It's a special skill to learn how to trade short. So when you see these guys get liquidated, they typically won't make the same mistakes again, which is why you get those aggressive pushes in price without much friction on the other side. Bitcoin option market trims bearish bias. Of course, this is a direct correlation to the article above it. First mover Asia Bitcoin altcoins climb following Fed Reserve Chief's inflation reassurances, right? So they did come out and reassure that they're going to raise the rates maybe 4 times this year, and you saw what happened to price. Bitcoin and equity stabilize as sentiment improves, right? So your news is starting to get a little bit more bullish. Once the news turns bullish, once your open interest confirms that the move should have happened, once you start to see things develop on the heat map where everything looks green, your next step is to come to the charts. On these charts, let me give you guys this play, this very quick scalp play, and then we'll get out of here for the day. This scalp play was a play on an overextension, right? So when price broke out of this level, it broke aggressively, and we do want to see it happen that way, right? We want to see these levels of liquidity get grabbed very quickly because we know that it's going for them, right? So when you get that big push, that aggressive move, it's positive. But then price sort of set sideways. So anytime you see this big overextension here, what do you leave behind? Imbalance. So what does price do? It automatically comes back down to refill that imbalance. And then this landed us at the 11 a.m. hour. Here's one thing that you may have noticed on the charts at 11 a.m. The 11 a.m. hour for Bitcoin has been extremely bullish. How do we know this? Well, we track it. So if I were to highlight the 11 a.m. hour for Bitcoin, which you guys could probably see here, everything for that hour, for the most part, over the course of the entire year, okay, has been bullish. You have big bullish moves, anywhere from 1 to 5%, and it's already happened 1, 2, 3, 4, 5 times this year. Now, if that's the case, if I'm in a short position, I want to exit right there. And as you guys can see, I got out probably at the most opportune time. Let's go to the 5-minute, okay, to see how accurate this was. This was a very short play. Okay, this took maybe an hour, hour and a half to play out. But what I want you guys to pay attention to is right at 11 a.m., right? I said, yeah, this is probably as far as this is going to go. And it did trail a little bit, but right after that, it rebounded. Now, where I got in at this trade, I would actually still probably be up in the trade, but I wouldn't be up by much, right? It sort of drew down on me after this time period. If I didn't have this knowledge here, as far as tracking the hours per se and what happens with price in those hours, I would have probably stayed in that short position. This is the level of detail that we try to get into when it comes down to trading and making decisions from hour to hour on what we want to see in price. What we see here is that price is starting to develop a bit of a range, okay? You have equal highs here created already. You have some lows here, equal lows essentially right here so far. So I want to see how this plays out for the rest of the day. Going into Asia, things may be moving a bit sideways. You may get a bit of a pump in the afternoon, but I'm anticipating that Asia is going to do one or two things. Either they're going to buy, right, to continue this move up, or they can push it back down to the zone and then London will come in and buy. I'm anticipating for tonight, whatever Asia chooses to do, London will do the opposite of it. It just seems to be set up that way at the current moment, but we'll see. We'll see. We'll see. All right, big prediction there. I think that's going to cover it for today. Once again, we did see our methods prove true. The liquidity is grabbed from the lower side here. Boom. Once that happens, price has the right to reverse. Open interest is down, which means that we should be bullish. Lots of news, bullish. Fear and greed index at 22, which is bullish. Heat map looking like a sea of green, again, bullish. And Chainlink is down, which also gives me an indicator that, the rest of these coins should pump, because as everything else was falling, Chainlink was pretty much the only thing moving. Okay, so being that some of that liquidity is coming out of Chainlink into other coins today may be the case. All right, so again, that does it for us. We will be bringing these types of videos every day. If you do find this information valuable, go ahead, like, subscribe. Also, be on the lookout for tutorials coming very soon. We are starting to draft some of this stuff up into PowerPoint presentations, and we're going to give live examples on the chart. Also, be sure to check in with us because we will be, doing some live trading here. We will also be updating folks on what we're doing with this practice account. Okay, I believe that practice is the best way to go when it comes to learning how to actually trade, deal with your emotions, place stop losses, know where to take profit. Practice accounts are the best thing you can do for yourself if you're still trying to learn how to trade. We'll dive deeper into how to set one up, how to actually trade on them, etc., right on TradingView. Okay. And all of this is free. And I believe that this is probably the best way you can go in regards to getting some education about yourself when it comes to trading, because not only do you need to learn, the technicals, but you also need to learn yourself. So again, we'll dive into this as time goes on. Expect some tutorials and expect some pretty good content coming your way from us moving forward. All right. This is the long and short. Thanks for joining. Like, subscribe, share the video, hit the bell notification. We will be coming to you again shortly with some 2022 updates for what we think is going to happen for the rest of this year. All right. So salute. Thanks for tuning in. Out of here. Peace.